Good afternoon, this is Pat Walker, Mission Winners, doing a video overview of the ETFs. Why do we look at the ETFs? It's not because we like to look at a bunch of charts. It's because we have a limited amount of money and a limited amount of time. We want to use it wisely. Here's a fact for you. Leading groups produce leading stocks produce leading groups. By looking at the ETFs, we can see where their strength, areas to maybe look do a little deeper for opportunity to make money, but also weakness, areas to avoid and save money. And that's why we do this. So we'll take it from the top. This is in alphabetical order. You can always look in the upper left-hand corner and see what it is. U.S. robotics, and you can see this is the 50-day moving average line. This is the 200-day. The green line's a very important one. The 50-day, the blue line's the 21-day exponential, very important. It's the 50-day simple. And you can see it's below the moving averages, and it's fallen on some volume spikes. What does it tell you? And it's been telling you, avoid robotic stocks. That's it. You don't have to overthink it. Cloud computing, acting a little choppier here. As you can see, it's below the 50-day. Right here was a good bar, but there's been some distribution in here too. It's below the 50-day. I said that to IBD meetups for years. The air is better above a rising 50-day. There you go. Let's get it back above the 50-day. What else does it say? It's hanging in pretty good. Maybe looking at some cloud computing stocks. That helps us. There's power in what we do here. Or maybe this is a candidate too, if the market takes off. That's a big if. All right, continue onwards. Here we go. This is the Dow Jones Industrial. Okay, the diamonds, and it's hanging in okay. All right, you can see that. It's hanging in all right. It's better than the other averages. Now, this is an important lesson most people don't know. This is only 30 stocks. It's price weighted. 30 stocks. It only takes several of them to act decent to keep this thing supported. All right, and by the way, institutions can help support it, so they can be selling a lot of other stocks, but people look at the Dow and say, oh, it's not so bad, I'll hang on. So it can mask underlying weakness in the markets, and you'll see what I mean a little bit when we go further in this. But so far, the Dow's hanging in there. What does it say to you? Maybe look at some Dow stocks. That's simple. Right here, Dow Jones Internet stocks, support on the 50-day. It's okay, but it needs some power off the 50-day. So far, it's just kind of trending down. Not a lot of leadership there. It tells you to be careful. IBD 50. Folks, this is an important ETF. This is the ETF of the IBD 50 stocks. And what is it telling? I mean, those are a great list of stocks, folks. I'm not slamming IBD. I'm not slamming the IBD 50. No, it's great. Bill O'Neill changed my life. True confession. But you look at this and you say, there's just not a lot of power. It's telling you, good stocks, there's not a lot of power. Be careful. MAXLIST stocks, support on the 50-day. Now look at this. The IBD 50 is really lagging. This one, again, FV, focusing on the MAXLIST stocks. It's hanging in a little bit better. And yes, we've been involved with some MAXLIST stocks. NVDA was a monster run for us. Monster. One of the biggest performing stocks, maybe the best performing stocks on the NASDAQ. We bought that stock on January 6th and January 9th. So, but right now you can see, looking at the MAXLIST index, it's still hanging in there. It's one of the few ETF indexes that are hanging in there. Maybe look at some MAXLIST stocks. China got sloppy here. Look what this did. Look at that gap down on volume. Don't ignore volume to the upside or to the downside. And it lost all the moving averages. Tells you to be careful with China. Gold, dead. Gold miners, it's below the 200-day. Leave it alone. So maybe this is the bottom. I don't want to play the maybe game. I want to stack the deck in my favor. Strength begets strength. You can say, really? Yeah. Nice trend there. Now, nothing. Be careful with gold miners. Gold, same situation. There's no power there. Be careful with gold. You can say, Patrick, you just blew by it. We don't need to overthink it. It's below all the moving averages. It's falling. There's no support. There's no buying. Why look at it? We've got a limited amount of money and time. Let's use both wisely. That's why we do this. Biotechnology is hanging in here, but it's below the 200-day. It's choppy, folks. It's whipping around. There's no real leadership. You're not going to see this in any book saying, this is the setup that you look for, because it's not. So just be careful with biotechnology. Oil, look at that. Look at this trend in oil. Isn't that beautiful? What has it been saying? Hey, maybe look at some energy stocks. Do we own some energy stocks? Yes, we do. And we have for a while. Think Schlumberger. This is still trending. That's good. It's a little bit extended. I'd be careful buying this. But energy is still a place to look into. There we go. Software technology below the 50-day. This needs to get some power over the 50-day, folks. Here's a very important lesson for everybody. Most people don't really know this. I'm sure most of you do, but I need to share it. Just because it's a red bar doesn't mean it's a bad bar. But more importantly, just because it's a green bar doesn't mean it's a good bar. Look at this bar right here. Oh, it's a green bar on volume. I'll make this bigger to help you. It gaps up, it runs up to the 50-day and closes below where it opened on a pickup in volume. Folks, it was met with selling pressure, not buying. Know that. That little lesson there can make you money and save you money. There we go. That's what we teach, Mission Winners. That's what we do. Medicine, I think they need some medicine. There's nothing good there. Avoid medical stocks. Mid caps hanging in there, all right? It's better than most of the indices. It's above the rising 50-day. Maybe that'll lift. What does that say? Oh, maybe look at some mid cap stocks. That's good to know. Small cap, mid cap, large stock. Mid cap's hanging in there. You'll see the contrast in a minute. Aerospace and defense is hanging there. Maybe look at some aerospace and defense stocks. Tell you one we had that worked out great was Boeing, BA. Take a look at that chart. That was a move for us. So, in fact, I'll play dad humor here. That baby flew. Okay, I'm sorry, I had to say it. So, you got to have fun too, by the way, team. Take what we do seriously, but enjoy it. Enjoy the process. I really mean that. I'm speaking from my heart. U.S. home construction still hanging there pretty good. A little bit of distribution coming in here and here, though. But look at this trend. This has been a huge trend. And yet, we've been involved with home building stocks quite a bit, as you know. So, lost a little bit of power, needs to start lifting up here. But there was selling on this bar here. There was selling on this bar here. Not a lot of power, so be cautious there. S&P 500 growth, it's hanging in there, supported the 50-day, looks better than a lot of other. What does that say? Oh, growth isn't a bad place to be. There you go. Small cap, hanging in. It's just hanging in. But look, do you see a lot of big green bars here? Like back here? Back in here, it looked good. Right here, there's no power. Be cautious with small cap stocks. Real estate, hanging in, kind of, okay? But it lost the 50-day a little bit. Support on the 200-day. This needs to get a lift here, folks. And there was some distribution in here. So be careful with real estate. Transports are hanging in, but again, had a great run, and it's lost the 21-day, and there was selling on Friday. Look at the volume pickup. Transports, but the trend is still up. Just be careful. Overall, for everybody, just be careful here, all right? It's like in Hill Street Blues. Let's be careful out there. Okay, let's move on. Some of you are going, I don't know what you're talking about. Anyway, from days gone by. Airlines, they were doing really well, and now they've pulled back a little bit. They've lost some power. And look at the bars. You can say, oh yeah, I see this, but look at the red selling bars. They've been selling it. Be cautious with that. Regional banks are hanging in there, just consolidating, and it's nice. They're consolidating on decreasing volume. It's just quiet at this point in time. Look at some regional banks, potential opportunity there in a good market. Mid-cap has done fairly well, but even it's starting to show a little distribution in here. Look at the red volume bars. It's below the falling 21-day moving average. Needs to start showing a little power. There you go. Move on. Oil services. Look at this. Look at this move. I just showed you a bunch of crud. This looks pretty good. And yes, it's told us back here, and we are involved in energy stocks. It's told us to. We don't have to say, oil, maybe it's going to. No, it's telling you, hey, it's okay. Now, I'm not saying buy it today or Monday, okay? I'm just saying it's provided opportunity for us. Just by looking at the ETF and then drilling, that's a bad pun, isn't it? I'm going to say it anyway, though. And then drilling down and look at some stocks. There you go. You got it, dad humor, you got to have a little fun. There we go. Pharmaceuticals is hanging in here, too. Bit of a defensive sector, though, isn't it? Got to have drugs. Okay. And if the market gets worse, everybody's got to have, no, I'm teasing. But drugs. You need pharmaceuticals, okay? It's not an option. If you need them, you got to get them. And it's hanging in there okay. So it doesn't look too bad. There's some accumulation in there. Take it to the weekly and see if there's anything. little bit extended there, so nothing really great on the weekly, but you can see it's hanging in there. A little bit of selling though on Friday. Okay, overall, just err to the side of caution. Continue work. QLD lost right here, the 50-day, and it did it on a pickup in volume. Here's another good lesson. Oh, it's a green bar, Pat, on good volume. Note where it opened, ran up, and note where it closed. It closed below where it opened. They sold into it, and it also fell below and closed below the 50-day. Just look right here. There's some distribution in here. What does that say? Be careful with NASDAQ 100 stocks. All right? QQQ, same situation. Another example. Oh, it's a green bar. Yeah, because it closed above where the previous closed, but look at where it closed versus the open on volume. They sold into it, folks. There you go. That's $1 million lesson right there. Retail's hanging in there. It's acted okay. It's still trending good. Maybe there's some opportunity in retail. There you go. You don't have to overthink it. Silver, leave it alone. It's tarnished. Boy, I'm really shining with all that today, aren't I? Leave that alone. Steel, it's lost leadership. It's been really good, but now it's starting to lose leadership. Needs to find support on the 50-day, okay? Needs to find support, so we'll see. Just be cautious with it. Semiconductors, SMH. Look at this. Look at the selling here, folks. Be careful with semiconductor stocks. Look what it did Friday. They were selling. They're selling semiconductor stocks. Watch out. There's the spiders, all right? Support on the 50-day. What does it need to do? It needs to get a powerful bounce off the 50-day. Overall, there's some distribution in here, though. Look, even on this bar. Oh, it's a green bar. Look at where it opened, ran up, and look at where it closed. It closed below where it opened on a pickup in volume. It was met with selling pressure. I need to pause here and share something. Please don't think, boy, you're big bearish and all that stuff. No, I'm not. I love looking for opportunities. I love it. I love finding opportunities. I love getting in at the right time. But there's some distribution going on right now. So what does it tell you? Just be a little more cautious. And we have been for a while. That's all. That's all I'm saying. All right? And never, from a psychological perspective, please never get angry or try to get back at the markets. I'm going to get back. I'm going to get back. No, the markets are not a living entity. They don't have feelings. It doesn't know that we exist. All we can do is get in line with price and volume action. That'll really help you, folks. If you find yourself getting angry, I said this at the meetups for years, anger and danger have far more in common than 5 letters. So just take a step back, breathe. Solar, that's been telling you for a long time. It's below the 200-day. The folly to stay away from solar. Done. So small cap, a little bit of support here like IWM, but there was some selling in here. Look at the red bars. Needs to show some power. Till then, be cautious. Uranium, kind of loosen up, but this is loose. I mean, it just kind of chops around, all right? So, but it doesn't look too bad. Maybe looking at some uranium stocks, all right? Oil, another oil stock. Look at that. I showed you one earlier. Oh, gosh, I guess we should own some oil. Yes, they've been working for a while. They're still working. I'm not saying buy today, okay, but good entry and trends pay. And I'm thankful that we use those tactics and own some. Consumer discretionary is just basing here. It needs to show some power. There's some tail bars, here. There's a tail bar here. Runs up and gaps down the next day. Drops the next day on volume. Tail bar here. Overall, just be a little cautious there, all right? Aerospace and defense is hanging in. I'll shrink that a bit. There you go. It's basing, not too bad. What's been a good aerospace defense stock? We had Boeing, BA, had a great move and sold some into strength, locked the rest in. It's hanging in. This is hanging in, all right? Biotechnology, stay away. That's it. You can say, boy, you went fast through that, Pat. Yeah, it's not there. It's below all the moving averages. The 50 days falling. There was serious selling in it. Stay away from biotech, all right? That's powerful knowledge. Home builders are still good. Look at this base. Check this out. Look at this base. We were seeing this back here. We were buying home building stocks. We got 4 of them right now. But look at that move, okay? So now look at it. What do? Well, let's analyze it, folks. You can say, oh, it's basing nicely. There's some distribution in here. Take a look. They're selling on this bar. They were selling on this bar. This bar was actually a good bar because it closed right near the highs. It only closed a little bit below the highs of this bar. This bar, quiet. This bar is heavier selling. Overall, be cautious. Let's continue onwards. Materials. How do you build things? How do you build houses? You need materials, but look at the selling here. They've been selling it on volume. Be a little careful there, okay? Communications is hanging in there. That's not too bad. We're about done. And then the energy sector, VRRM, that's hanging in there. Gosh, let me think here. XLE. That's the ticker symbol. Oh, well, let me think here. Oh, energy. Another energy ETF. We've seen like 3 of them that have been acting good. And that's like our heaviest exposure is energy. There you go. Financials are hanging in. This isn't too bad. I mean, that's a good sign that financials haven't cracked. All right. Now, I'm not saying they won't, but so far they're hanging in there. Okay. I'm not saying buy stuff here, but just err to the side of caution. Look here. XLI, industrial, still hanging in there too, but there's some distribution coming in here. Got to be a little cautious. Here we go. Technology, XLK. This to me is a great proxy right here. What's XLK doing? Well, it's doing pretty good. I guess we should look at some technology stocks. Oh, yeah, they're starting to sell it. Maybe I ought to be a little more cautious with technology. And we were selling into strength. We were getting lighter. We weren't buying a bunch. The M emission winners, the market, never argue with it. It's bigger than all of us combined. Just simply get in line with what's happening. What does that mean sometimes? Not doing anything. Cash is a position too. It's good for the head. It's good for the pocketbook. You're not scarred that when the markets do turn, and folks, they will turn. They will. I guarantee it. Always have, always will. When? I don't know. But we'll be ready mentally. We'll be ready psychologically per se. We'll be ready financially just by watching what's happening. That's exciting. Also know this. We are approaching the fourth quarter. The fourth quarter is historically really good. Am I saying it's going to be good this year? No, I'm not. I'm saying, but historically it is. And that's an edge that we use. Always be prepared. And we are. Consumer staples, really not much power there. Be careful with that. Healthcare is hanging in here. Some distribution, but it's still hanging in. It's not refusing to fall. But note, healthcare is kind of a defensive sector, isn't it? Here we go. Consumer discretionary is hanging in also. That's not too bad. The consumer hasn't given up yet. Right here, metals and mining, lost the 200-day. It's not as powerful as it used to be. XOP, oil and gas. Oh, gee. Gosh, what is it? Oh, it's another energy ETF. Look what it's doing in a crummy market. Look at the trend. And again, that's why it was telling us, and it has been telling us, hey, you might want to buy some energy stocks. You might want to own some energy stocks. You don't need to forecast. Just get in line with what is. That really helps. Retail, it's just basing here. It's lost a little power. Software, another technology ETF. Software, what's it been saying? Be careful with software. And the MAXLIST. Here's Apple. Apple was a gift for us. And if you look at the weekly chart, this is why, and I taught this for years through IBD meetups too, weekly. Always look at the weekly charts too. Don't just look at daily, all right? The weekly had a great base, and that was a good run for us, all right? And you could see why, all right? And trends paid. That's the 8-period weekly moving average. That paid. Here's the daily, 21. It worked. We're out of it. We took the money and ran. And that's good. We don't argue with price. Is there anything to do with it now? You could say, what about now? There's really nothing good to do with it now. We just got to wait. It closed down in the bottom third of its weekly lows on a pickup in volume. Let's just see what it does. Can't really do anything with it now. No special deals right there. Amazon, clean and simple base entry back here on the weekly. And look at that trend. And you can say, oh, there's support on the ADMA. Are you still in it, Pat? Yeah, VIPs are still involved with this stock. You bet. There you go. It works. Trends pay. Look at the weekly. By the way, did we sell in strength? You bet we did. Definitely. BABA, this is an important lesson for everybody. It's taken off. This is great. Folks, they had earnings. It is compulsory to always know the earnings. That would be what you call a haircut right there. That would be a stinger, all right? Let it settle down. Perhaps it's going to form a handle up here, which you could see on the weekly. And if it does, we'll be ready. Right now, though, there's nothing to do with it. Just leave it alone. But the valuable lesson, be careful buying before earnings. Continue onwards. BIDU, look what it did. See this? They're sister stocks. There's BABA dropping down. There's BIDU. Look what it does. Another case of be careful. And this is a valuable lesson right here. When a stock gaps up, runs up, and closes near the lows of the day, hey, that is a big red warning flag saying, hey, don't buy me, be careful. And yeah, be careful. There you go. Is there anything to do with it now? No, not right now. Eventually maybe, but not right now. Google looked like it wanted to go, started to lift, but there's just no power here yet. Notice I have a price alert set. We'll watch it and see what happens. It's dependent on the weekly. Maybe it's going to lift off on the daily. We'll see. Not real clean at this point in time, okay? Some distribution in there. Continue onwards. Goldman Sachs, there's nothing there, right? Just leave it alone. It's, oh, maybe. Why? Why play the maybe game? It's not a good chart right now. Just wait. MasterCard looked like it wanted to go on Thursday, and it comes right back. So, again, not a lot of power. Meta's been good. Folks, see the base down here? And then the base here? And then there's another base here on the daily. We bought these through here. And we've sold into strength. We have small shares left. We'll watch it and see what happens. Price alerts are set. But what's the lesson here? Good entries and trends pay. They pay. There you go. They pay. They pay. That's it. There it is. It's a MAXLIST stock. And the big lesson is this. Clean and simple base entries, daily and or weekly, and ride trends. Microsoft lifts off right here. We bought this. Runs up, starts to come back down. We take it out. I mean, we sold some into strength. That saved our bacon, but there's nothing to do with it now. We just have to wait and leave it alone. It's that simple. Netflix, there's nothing there. It was, this was a good run, and you know what really helped us? Sells into strength, knowing earnings were coming. Sells into strength. Use that tactic, folks. Is there anything to do with NVIDIA? NVIDIA was a rocket ship. And again, you can say, oh, you're bragging. Okay, I'm thankful for this. This was on the key list back here. And we had sells into strength up here. Last share sold, and we took the money, and there you go. We're out. Tesla just can't get going. All right, it can't get going here. So is there anything to do with it? No, not really. Leave it alone. Continue on. Well, let me clarify. If this lifts above here, that might be a spot, and then push through the 50-day. But it would be aggressive. Visa, it's everywhere you want to be. Look, it starts to lift off and takes off and closes near the lows of the day on a slight pickup in volume. Team, there's just no power. There's just no power, so you got to be cautious.
Thank you for watching the video. We hope you enjoyed it. If you did, please hit like. Maybe hit that subscribe button. We come up with new content nearly every day. Also, check out the videos on the right. YouTube recommends the one on the top, and the bottom one is something we thought you might enjoy. See you next time.